we wanted to speak with you, and thanks for taking out the time because I know you're super busy. Because there's just so much happening in this space, right?
Yeah.
I want to
Yeah.
kick off with the news, and then we can sort of get into
Yeah.
context and Zest journey in particular. But this morning we had the news that the likes of a Visa, for example, are also looking to get into the BNPL space, and that's
Yeah.
interesting because players like Zest were in fact offering an alternative to credit cards. So what does it mean for the
Exactly.
industry to now have the
Yeah.
traditional credit card companies wanting to get in?
No, it's completely unsurprising, right? So just look at the history of credit card in India. It has not been a huge, growth market in the last decade.
Mm.
So we've got about 30 million unique credit card users in this country. We've now got 500 million people using WhatsApp and YouTube every day, right? So 30 million to 500 million. Huge gap of unaddressed consumer credit demand, and clear that a credit card is not the solution. Customers are turning away from cards all over the world. People are turning to mobile payments, and India is absolutely at the cusp of that. Wherever you go now, I'm sure you experience it, mobile payment is preferred. I actually got declined using my card in a store this week, and he requested, Google Pay, and that's the way we're going. So for companies like, Visa from the traditional credit card industry, BNPL is going to become an absolute hygiene product in a market like India. And we're just really excited to see more players come in and grow the market to the full potential.
So exactly what you just said. Clearly, there's an opportunity and a
Yeah.
huge one. This
Yeah.
is not new to you. You've been, one of the bigger players in the space. You just recently raised your Series C 50 mil and more than that. Tell us how you're seeing the growth panning out. What's the level of growth? Is it multiplying year on year as you
Yeah.
move forward? Is adoption becoming faster now?
Absolutely, absolutely. We've been building this business for 5.5 years. And I would say the first couple of years were pretty slow. We were early. We were definitely early, but better to be early than late. What we've seen in the last 2 years is an exponential explosion in demand. And I don't just mean demand at the consumer level, also at the level of brands, retailers, manufacturers. India has become one of the most important consumer markets in the world, and global brands as well as domestic brands now have to provide products like BNPL to drive affordability for consumers. So we've seen a growth of about 5x year on year over the last 12 months. We are expecting this Diwali to be, 5 to 6x bigger than last, and that's obviously 20 times bigger than the one before that. So it's a really incredible time for the industry, but I would say it's still day zero. Probably collectively in this country, there are, less than maybe 15 million people using BNPL products. And we know that these products are applicable for maybe 2 to 300 million right now. Yeah.
Okay. Well, talking about consumers, Tina, why don't you come in here? Because Tina's story is really from the consumer standpoint, and she has several questions on that.
I have a question from consumers' point of view. When we talk about BNPL, there are so many players present in the market. When we talk about the Indian market, there are banks offering BNPL facility. There are e-commerce players who have their own facility, and there are fintech players like you who are offering this new line of credit. So,
Yeah.
as a customer, how do I differentiate among all these players, and how do I decide what works the best for me?
Yes, that's a great question. Look, BNPL came from a very unique place in financial services. BNPL was invented in markets where consumers were losing trust in the traditional providers of finance. So BNPL players, by definition, must be very transparent, trusted, and honest. So I would always say, as a consumer, go for the provider where you feel the most comfort about their transparency, especially around pricing. BNPL should be the cheapest or zero cost option in the payment stack. That's because in most models, the merchant or the manufacturer is subsidizing the cost of the credit. If you're seeing lots of additional fees, hidden fees, extra fees, be suspicious, because that's probably not a good player. The other thing I would really say is important for consumers to look out for is we do believe that these products should be regulated like credit products, and the RBI have made that very clear. So be suspicious if a BNPL player does not do things like KYC and all of the normal regulatory steps that you would expect with a credit product. It's really important to look after your financial health, to do things like KYC. Otherwise, fraud will be on the rise in this market.
You talked about zero cost EMI. This
Yeah.
makes it look very attractive because easy money is flowing. But there's also the risk of overspending, purchasing more than what you can afford. So in such a scenario, if the default happens, if the person is not able to pay, as a
Yeah.
company, what measure do you adopt, or how do you make sure that the person pays? And if the default happens, the person has to pay credit this high interest rate or late payment fees just the way we pay for credit cards? What is the differentiation of?
No, that's a really good point. I'm glad you asked about that. Again, this is a good way to spot a good BNPL company. I would say a good BNPL company will have very, very strong understanding of risk. And what that means is underwriting and good risk management will be core and DNA. And that's certainly true at ZestMoney. So what that means is we do a very thorough job of understanding the customer when we first meet them. And we only ascribe a credit limit that is very, very manageable and affordable. The last thing we would ever want to do is create any financial stress in a consumer's life. So you often find credit limits are actually much lower than credit cards, and that's deliberate. The idea is that the product should feel light, it should feel free, it should feel cheap. It shouldn't give a burden of an excess balance and then that out of control feeling of extra cost. So again, be very conservative about looking for things like late payment fees. Good BNPL companies don't need to charge late payment fees because they make enough money from the customer repaying on time, and that's really important.
So take us through, Lizzie, the path to profitability here for a company like yours.
Yeah.
Go for it. And it's in the
Yeah.
sense if the underwriting is largely taken, is it
Correct.
your company or the banks, or who's taking on the onus?
It depends. There are different models right now in the market in India, and we also operate a variety of different models depending on the bank partners that we work with. But it's important to note that mostly in BNPL, you will see much lower credit costs than in traditional sectors like personal loans or unsecured consumer credit. So the credit costs in BNPL are low and declining typically as the market develops and becomes better understood. The other important factor is the operating costs and the marketing or acquisition costs are very, very low in a BNPL model, especially compared to a credit card or a traditional consumer credit model. That means that over time, especially as customers become more loyal and do multiple transactions, you can see very, very, very attractive unit economics, both for the fintech partner and the bank if they're working together, because you're creating basically a higher turnover, more productive balance sheet than a more traditional old-fashioned consumer credit model. So that's why investors are going gaga over these companies all over the world, not just in India. But we do need to see more profitable business models emerge. And I think we will see that first in India, because in India, you actually have more sensible businesses being built with higher participation from brands and merchants in the revenue stack. And that's really important.
You mentioned the festive season as well, and then I'll get Tina's thoughts on this too. But a lot of optimism, spending seems to be coming back.
Absolutely.
Is the worst over? Are there certain segments that are doing better? What are the trends that you're spotting?
Yeah, fingers crossed. We don't have a crystal ball, but we are seeing some incredible trends. I think it's fair to say the Indian consumer and the Indian retail landscape is incredibly resilient. The bounce back has been phenomenal. And I think it's more than just revenge shopping. I think people truly have a very positive outlook about, economic strength. What I would say is there's some very specific phenomenons happening as well right now. One phenomenon we're seeing is the real emergence of national domestic consumer brands. And we're really, really excited about that. 10 years ago, there were so many products, especially in women's wear, in fashion, in cosmetics, that had to be imported. And in the last 2 years, you've seen a real explosion in homegrown brands. Those brands want to form direct relationships with their customers, and affordability in BNPL is a big part of their strategy. So one of our predictions is that we will see a big consumer brand economy emerge, and that BNPL will be a big part of that growth.
So, Lizzie, if you are talking about the exponential growth in this sector, but central bank in India has time and again said about the harsh payment recovery methods that digital lenders have to afford to be, in case there is default in payment. So, as a company, how do you plan to deal with such defaults, or currently how do you deal with borrowers who don't pay on time?
Yeah, so we're a bit different. I think what you're referring to were some of the scam apps that existed last year. That was a really, unfortunate time in the industry. And as an industry, we rallied around. We created the Digital Lending Association to help the RBI identify who were these, bad actors, bad players in the industry, and differentiate the good and regulated players like ourselves, like ZestMoney. What we also did at the Digital Lending Association is write our own code of conduct, particularly relating to digital collections. Most of the good digital lenders follow very smart AI-driven digital collections practices. What that means is we work on automated reminders using notifications, email, SMS, very friendly, very light touch, normally not humans involved. And we wanted to educate the regulator and help them understand that that's the positive side of digital collections. As an industry, it's really on us to educate the consumer and create our own best practices. And that's something that we've been driving at ZestMoney as part of the Digital Lending Association. So consumer protection is probably the most important thing for the industry right now, and making sure that the unscrupulous players do not scale and do not have any ability to harm customers who are coming into this space and want to be treated with respect and fairness.
I also want to get a sense of the kind of runway you're looking at now, Lizzie. And I know we've asked you on everything today. While we've got you, we cover all ground. With the recent fundraise and the kind of growth that you're looking at, what's the kind of runway, what are the kind of plans you have now for ZestMoney?
Yeah, it's a time of super growth, certainly for us, and I think for the industry. Goldman Sachs put out a recent research report expecting BNPL to get to about a $35 billion GMV industry. That's a big number. That's completely inevitable. We're firm believers that we will get there sooner rather than later. At Zest, we will be crossing $1 billion in GMV run rate at the beginning of next year, so around Jan-Feb time. And that's a really meaningful number, even on a global scale. Some of the largest BNPL players in the world do billions of dollars of GMV, and we think that's when India gets on the map, on the mark. So we're racing towards that number. But we easily think that ZestMoney alone could be a $3 to $5 billion GMV run rate in 2.5 years. So exciting growth ahead.
It's very exciting, and I can't help but asking, are there any segments in terms of tier 2 towns or regions also where you're seeing some of this growth coming in from?
It's a really good question. We see a lot of inbound interest, particularly from non-metros. What you find is obviously credit card penetration is much higher in the top cities. So tier 2 and beyond is becoming a very, very exciting area, I guess, for BNPL players. I wouldn't say this is in any way, rural or semi-rural, not necessarily there yet, but some of the smaller cities, especially where online commerce is taking off in a big way, so people have less access to the retail brands that we may have in a metro, that's where you see real explosion in these direct consumer brands, and BNPL is a big part of that affordability story. So I'd say it's a nationwide phenomenon, but you will see some very interesting pockets, especially in the bigger tier 2 cities. That's what we're seeing.
Super exciting, and thank you so much for joining us today.
Thank you.